So I don't think the firm is going to exist in 2030.
Yeah.
And that's a bold statement. And I've said it here. I've said it in Accounting Today. It's out there that I don't believe the CPA firm as we know it is not going to exist in 2030. Now, I'm not saying there won't be accountants who are selling accounting and tax services, but it's not going to be in a professional services model, because there's too many things changing, and private equity, when they go to exit, like, it's not going to be a firm. Again, audit's its own beast.
Welcome to AFO Wealth Management Forward, a podcast powered by Arrowroot Family Office that's at the intersection of accounting, wealth management, behavioral finance, technology, and entrepreneurship. We help accounting firms and financial advisors grow their practice by going beyond the numbers as we learn from industry leaders and subject matter experts to discover the secret to their success. A podcast that highlights everything from the transformative power of AI to embracing the human-first approach of behavioral finance to help you understand the psychological and emotional relationships to money and meaning. Here is your host, Rory Henry, director at Arrowroot Family Office and author of Holistic Guide to Wealth Management.
All right. Hello, everyone. Let me welcome back our guest, Jody Padar. She just released her latest book, Radical Pricing: How to Optimize Profits, Delight Customers, and Build a Top Value Firm. She's a Radical CPA. She's also a friend of mine. We just spent some time together at Bridging the Gap. I'm excited to have her talk with us today. So without further ado, let me welcome back for the third time our guest, Jody Padar. Jody, welcome to the show.
Thanks, Rory, for having me. I'm excited to be here again. It's awesome.
Again, I know. I think you and Donnie Shimamoto are now the only three-time guests. So you're in elite club there.
That's awesome.
Yeah. Well, let's get started here. Why don't you talk a little bit, for those folks who are listening or that don't know you, you talk a little bit about what you're doing and what motivated you here to write the latest book, Radical Pricing?
Sure. So, I owned my own firm for 14 years. I sold it in 2020. And the last few years, I've been in the startup world. I was at BotKeeper for a couple of years. I'm at Get April. And ultimately, the market is changing. The market is significantly changing, even since I sold my firm. And when AI comes in, right, like, pricing has to change. The business model has to change.
Yeah.
And so radical pricing is really, even though we call it radical pricing and it's about value pricing or fixed pricing or how you change your pricing model, really what it is it's the summation of how the business model has to change for accounting firms or all professional services firms as new technologies, AI comes in, et cetera. And I think looking back, because my firm was really, like, I built it from, I had a little bit of legacy, but I built it from scratch. I didn't realize how much, because I had always priced up front, how much it had impacted the firm that I had built years ago, and why so many old school firms were struggling with change. And it wasn't until I kind of got out of my firm and kind of stepped back and looked at it and was like, aha, it was like that aha moment that it's really, until firms change their pricing model, nothing else can change. And so that's what we're talking about in radical pricing. So it's really more than just pricing. It's really about the business model, the shift, all the competition and players coming into the space. But ultimately, firms really need to reevaluate their business model if they want to remain relevant in the future. And it starts with pricing.
Yeah, I totally agree. Well, let's start there with the competition coming into the marketplace and those outside players. We talked about it with a number of folks recently on the show. Private equities entering the space. Many people are upset about that. Others are happy about it. And I think it's a natural adjustment here. They're seeing the arbitrage and the potential to profit on a broken business model. So I think this is a response to the traditional way of doing business. So can you talk about not only just private equity, but we can touch on the fintech players involved, because I know you're heavily involved in that space as well.
Yeah, so I think that's the big thing too. Maybe I have a different unique view on, because I've been playing in the fintech space now for the last 5 years, is that firms think their competition is the firm next door, the firm across the country, and that's not who their competition is. Their competition is a technology company that's selling accounting and tax services. And that's the threat. Now, scale factor didn't work, but there are a bunch of new, I'll call them next gen scale factors that are starting to creep up, and they're doing really well and they're growing really fast. And that's who we should be thinking about our competition. We also have Intuit, who's playing in our space now, who's a technology company by nature, right? And they're going direct to SMB customers. And people could say, oh, well, you know, they want their CPA, whatever. It's hard to beat convenience of when you click on that computer button, it says, I need help. And someone immediately replies to you and responds to answer your question versus, oh, wait, I got to call my CPA. Maybe they'll call me back. I'll send an email. It'll be 4 days later before they return my call, right? So like you can say Intuit's not your competition, but let me tell you, instant response is very enticing, right? Like, so, and that's a business model change, right? That's something that is inherent to a technology company's business model, right? You also have private equity coming into the space who's coming because they see an opportunity to increase margins. They realize that most accountants haven't updated their business model. And, you know, they wouldn't be coming if they didn't see an opportunity to make the business more profitable. Believe me, they're not coming because they want to.
Are you an accountant looking to generate more revenue and secure your future success as automation and artificial intelligence revolutionize the accounting profession? If so, contact us at AFO Wealth Management Forward. We specialize in helping accountants and advisors just like you build a custom brand to pinpoint your optimal clientele, generate highly qualified leads through our data-driven digital marketing, and execute wealth management growth services to bring more value to your firm and your client's life. Our strategic approach to branding, marketing, and wealth management is carefully tailored to attract ideal clients, increase customer retention rates, and cultivate lasting relationships with clients across generations. Visit wealthmanagementforward.com to book your free consultation to find out how you can elevate your practice.
Become accountants or whatever, they see the profit there, right? And for everyone who has an opinion about private equity, my thought is private equity's here. You have to figure out how you're going to work with it or work against it if you choose not to be part of the private equity wave, because like it is a viable business model now that's in our space. So now you have to figure out how you're going to adjust to them being here, because they're going to change firms and they're going to make them a lot more technologically savvy, a lot more universal. Like they're going to change how a firm operates, because that's what they're putting money in to do, right? Like they're not doing it because they want to, right? Or like there's an opportunity there for them. So there's them. And then there's fintech who are making money on money, and they're coming into the space because they see an opportunity to sell money. And that's what wealth management is. And wealth management's always sold money off of tax returns since the beginning of time. And again, here's another place where fintech sees an opportunity to do that. Now, maybe it's in a bank account, and maybe it's not in wealth management, or maybe there will be more, I'll say IRAs or, 401ks or kind of traditionally more wealth management services sold off of tax returns. So like the market is really changing, and then you have AI, and that's just a market without AI, right? And now let's throw in a little bit of AI
on the plate.
So it's changing. The market is changing, and yet so many old school firms think that their competition is the firm down the block, or maybe a top 100 firm. It's not your competition. It's everybody else. So and a lot to keep your eyes open to.
No, and that's why I trademark the term advisor, Rory, Jody. It's the return on relationship, in providing a number of different services to that relationship and using what you have as far as the shared human experience to differentiate yourself from the 100%. AI out there, the technology. People still want to deal with a person in these complex decisions, many times filing a tax return, right?
But you have to respond.
Yeah,
if you want to have a return on a relationship, you have to be able to have a relationship. Right now, most firms don't have the bandwidth to have those relationships the way they should. They may for a handful of their clients, but their business model is so broken that they can't give that humanness to their average customer. And that's what the industry is missing. That's what the profession is losing out on right now. And that's why all these players are coming in, because they see an opportunity for a better customer experience.
Yeah. Well, I think that's why our books and our methodologies, Jody, align really well, because they need to go through the process of changing their pricing, changing their service offering, which will enable them to have more resources to then pay people more money. We talk about the pipeline issue. We were sitting with at a table during, who was it? Jennifer Wilson's talk. And she was going over the pipeline issue. And I believe that obviously we have to become more attractive, but we have to become more attractive as well. Starting salaries, those starting salaries aren't attractive, or people can go into tech, right? Or healthcare. And so we're seeing people not wanting to come to the profession. So I think having the resources by having the pricing, right, and delivering
Right.
greater value to your clients, you can then attract more talent to the profession.
Well, right. We're at a race to the bottom, and we
Yeah.
shouldn't be there, right? Like we shouldn't be at the race to the bottom. And the only way you can do that is to delight your customer, to figure out what's different, to really optimize, and I would say productize your service offering. So you know what it is you sell, you know how to deliver it, and you could deliver it consistently in a manner. For too many years, CPAs take anyone who walks in the door and they do anything based on what they want. And the reason they do that is because they bill by the hour, because an hour to them is an hour is an hour.
Yeah.
But if you're going to start pricing your services up front, and again, this is where the business model shift comes in.
Yeah.
Your back of the house has to be organized in order for you to be profitable at pricing up front. And so for all the people who've said, oh, I've tried value pricing, or I've tried pricing up front and I lose my shirt, it's because the behind the scenes of your organization is not ready. And that's what nobody's talked about before. And that's where my book is different, because everyone else has come at it from a marketing perspective, a value perspective. They haven't actually come at it from an operational perspective. And that's where radical pricing is really different. It really talks about really productizing your service offering, getting your ducks in a row, figuring out who you serve, how you're going to serve them. And I would say then most importantly, getting your team involved so they know what it is they're delivering, where to begin the work, where to end the work, and how to step back and stop doing work if it shouldn't be, if it's not included in the service offering, because too many accountants give too much away because they're afraid to have conversations. But getting your whole team aligned on the back of the house. Because right now, what's happened with a lot of pricing with Ron Baker, and I love Ron Baker, is he talks about the value and great and all this stuff, but he never talks about how disorganized accounting firms are behind the scenes.
Right.
And that's where accountants struggle. So until you get the back of the house organized, you're never going to be successful at value pricing.
Well, let's give some how-tos for the audience then here, Jody, because I love the personas that you had in the book to really segment clients. You talk about, I think was it Seller Sally? You had Construction Chuck. You give different personas for people to bucket in clients. I think there's Joe's small business owner. There's real estate guy persona. Can you talk about how you could segment your client base with these various personas?
Yeah, so I think what's interesting is I just went through like kind of my old client base and I kind of gave them personas, but any firm knows that if they start bucketing their clients, that a lot of their business owners are very much the same. And when I say the same, meaning, the real estate guy has a very specific persona. And a lot of it is just based on what he does is transaction based versus like regular reoccurring revenue kinds of things, right? So the questions he asks are very specific and technical, and they're deal based, right? So the way you're going to talk to a real estate guy, and again, this is part of the whole customer experience, is you're going to talk in his language. You're going to talk to him when he wants to talk to you, because usually it's on a cell phone in between his meetings. It's not like he's not going to schedule a Zoom with you. So if you work in a Zoom call meeting, guess what? Like he's probably not the right fit for you if you're not willing to pick up a cell phone, right? Like, and there are people who won't pick up a cell phone. So part of it is having the customer experience fit the person who you're working with, right? And documenting what that customer experience is and how you're going to use their terminology, how you're going to walk through it in the way they work, right?
Meet them where they're at.
Meet them where they're at. And if you do that, and a lot of this isn't even accounting. Like, let's
Right.
just even
General
take the
business
technical
practices.
out of it.
Yeah.
It's customer relationships
Yes.
and how you deal with specific personalities.
Yeah.
And if you can document that and kind of, package it,
Yeah. Get an
then
SOP. Yeah.
that person is going to love you, and they're going to tell all their friends who are just like them how you work with them, and they're going to grow your business exponentially because they all kind of hang out together, right?
Yeah.
Like people like hang out with people who are like them.
Right. Well, that's the value of having a net promoter score. That's why I go back to that return on relationship and getting, advocates for your firm who talk to other people about it and get that referral business. So you're getting a survey out to customers, getting an employee satisfaction, because if you have an excited team, you can have an excited team that provides exceptional services. And looking at, I know you had stats, Jody, I think in the book where you talk about like customers per employee actually quantifying like an NPS type score.
So my thing is I do revenue per full-time equivalent, right?
Yeah,
So
that's right.
yes, you can do an NPS score, right? But I think when you look at it, revenue per full-time equivalent, that's an amazing metric because I think it shows the differential of how, if you price your services correct in your firm, the profitability skyrockets. And that's what you miss in billing by the hour, because when you bill by the hour, an hour is an hour is an hour. And if a senior manager does work that a bot could do, you miss the profitability piece, because now you've put someone who, like, let's say they're billing out at $250 an hour, right? And a bot could have done that work. Why are you wasting that? And let's say that labor hour probably cost you over $100 anyways. So why are you putting $100 cost labor hour on something a bot could do? And it would be like pennies on the dollar. Like, how stupid is that, right? Not to call CPA stupid, but like, it's the business model that holds us back, that prevents us from being innovative, that prevents us from making the changes. And why? It's because we've always done it that way. And we're too busy to actually like step back and think about how we've done it. Plus, I would argue that our providers haven't given us the data to actually look at how we could run our firms more profitably. So the practice management solutions, none of them really give you that data to help you.
Yeah. There's some great solutions on the wealth side. A couple of people wrote chapters in my book, Jody, that use AI to look at next best opportunities for clients. So looking at moments matter. For instance, when a client reaches 50, we could do catch-up contributions for retirement accounts, right? Looking at working papers at age 14 for kids, potentially. So that's an opportunity to have that conversation with that client. So I think there's technologies out there that are identifying those potential opportunities. But as you said, Jody, if providers are working on the grunt work and not doing that high level work, they're missing out on tremendous ways to grow their business and increase revenue. Being proactive and looking at ways to provide great services to their top clients. And that's why I say, if you have a firm that streamline their processes, that's agile, they can get into the wealth management business, right? And get those higher margin services.
100%. I mean, and that's why wealth management's coming backwards, right? Like into tax, they're all the wealth management firms are buying tax firms because it's the feeder.
Yep. Yeah, it's that opportunity to be that one-stop shop, and we're seeing a lot. Back to the M&A, we're seeing a lot of M&A in the wealth management space as well, and we've had conversations internally where it's going to be tough for the smaller practitioners out there to compete with the bigger firms because they just won't have the resources. So if you're not connected to many times a larger entity, it's going to be hard for you to have the marketing dollars to compete or the service offerings to compete with those larger firms out there, whether it's wealth management or accounting.
What's going to happen is the big are going to get really big, and the very small will be okay, but the middle is just going to go away.
The middle's going to go away. Shifting topics here, Alan Colton was speaking at Bridging the Gap, and Alan said that he says that I think it was the last 4 years more changes occurred than the last 45 years. And then he also said in the next 5 years, he could see this as maybe the most challenging for the accounting profession, probably because the reasons we talk about. But he says the last 5 years, a lot of these government programs have allowed firms to be more profitable than they ever have, but those government programs are going away. So it might be some troubled waters here in the future, on top of obviously the private equity and the AI coming into the space. I'd love to get your thoughts on that, Jody.
So I don't think the firm is going to exist in 2030.
Yeah.
And that's a bold statement. And I've said it here. I've said it in Accounting Today. It's out there that I don't believe the CPA firm as we know it is not going to exist in 2030. Now, I'm not saying there won't be accountants who are selling accounting and tax services, but it's not going to be in a professional services model, because there's too many things changing, and private equity, when they go to exit, like, it's not going to be a firm. Again, audit's its own beast, right?
Right. I take separate audits.
So
separate,
take
right?
audit out,
Yeah.
but everything else, and most of what accountants do, which is accounting work, tax work, advisory services, you don't need to be a CPA firm to do any of that. And so as private equity looks to exit, right, because they're going to come in, well, at a certain point they have to get out, right? Then what will those firms be? Well, they're not going to be professional services firms. They're going to be companies. And I think that's okay. So I think the CPA firm as we know it is not going to be here in 2030.
Yeah. Well, then what is your advice to business owners out there on how they need to prepare for that world?
So I think the business owner is okay, right? I think the firm owner is more of the problem, right? Or I think business owners will find someone who can meet their needs, right? Because like I said, the role of an accountant isn't going away. It's just the structure that they live in or operate out of is fundamentally changing. So I think they're okay, but I think the big wake up call is for those who haven't thought about how they're going to play in this new world. You need to figure it out. And I'm not saying there's a right place to be or a wrong place to be, but you need to open your eyes and say, okay, the way I've traditionally operated for the last 10 years, 20 years, 30 years is not the way that I'm going to operate moving forward. And I need to figure out where I want to play and how I want to interact with these technology companies.
Yeah. So there's a McKinsey study. I don't know if you know the study, but there's a McKinsey study that says by 2030 on the wealth management side, we're all going to become basically integrated life and wealth coaches, looking at taxes, looking at financial wellness, looking at healthcare. The wealth manager, the investment manager of today is not going to look the same here in the next 10 years. And so we're seeing that on the wealth side as well. I really do believe, obviously, as Jody, in this integrated model, really providing for the many needs of the client, and almost being like that therapist, that life coach, to help them optimize their business, optimize their personal finances, and in essence, optimize their well-being.
So I think that's huge, and I think it's really important, but I think the scary piece of that is when everyone gets their advice from TikTok, and regulated financial advisors aren't allowed to be on social media, right? Like, they're very limited in what they can say and what they can't say. How does that get confused with the market and the people who are going to TikTok, who are getting advice from the nut jobs as opposed to from truly educated financial professionals? And I think that's almost like the regulators are doing a disservice to the public by limiting their ability to speak. And I know there's no solution for it. I don't know what the solution is, but I think it's something that the public has to be aware of.
Well, I'm working on a TV show, Jody, as you know, so I can hopefully get the terminology like fiduciary out there and best interest out to the mass audience. But that kind of leads me to the next question is, 75% of today's CPAs are retiring in the next 15 years. So, we are going to have some level of accountability in our professional service providers. Obviously we talked about the pipeline problem, but maybe I want to have you touch on that a little further on, do we even need those CPAs if we don't,
I don't think we need them. My personal opinion is automation's going to take care of it. And quite honestly, like, some of them shouldn't be in business like right now anyways, because what they're doing is not helpful. And I say that because I know that they're intentionally not trying to be not helpful. But when you hear about firm owners, and I hear it during tax season every year, there's 2 or 3 people who reach out to me who say, so-and-so got ill, or so-and-so, and they didn't make a succession plan for their firm, and they leave their clients high and dry in February, and all these other firms can't pick up the work. How is that being helpful to your client? And it's ego, right? Like, they can't let it go. And they're boomers, well, because their age, right? But they don't know what to do because they don't know how to not work. So
That's the only thing they know, right?
Work.
Yeah, it's the only thing that they know, right? They know one way. They probably haven't updated their way of thinking or been to conferences like Bridging the Gap for the
But not even like forget the technology side of it, because like even if they're not technology savvy, they believe they're doing a service for their clients, but what they don't realize is that like you have to kind of you have to know when it's your time to step down.
Yeah. Yeah, I agree. And I think there's that stat that the AI CPA says something like there's a benchmark of 19-1 partner to staff ratio, and that partner should be doing like 5% of the work.
Yeah, so yeah, I have that stat, right? So the
Yeah.
way it is it's the partner should do 5%, the manager should do 15%,
15, yeah.
and 80%
Yeah.
should be done by a staff accountant. And I would argue that of that 80%,
Technology.
another 60% of that work should be done by a bot
Yeah.
or automation,
Yeah.
and 20% should be done by a staff
By
accountant. So it
staff
should be
accountant.
20, 15, and 5.
That's what I was going to ask the question, but you answered it for me already, Jody. I totally agree. And with AI, I mean, it's only going to get
It's
more
only
skewed,
gonna
right?
get that much faster. So the hard part is that knowledge transfer, right?
Yeah.
So many partners learn how to have conversations over time because they saw things, they experienced them, right? And that's how they kind of develop their advisory skill set, their conversations. But they haven't necessarily done the best job of passing that down to the next gen. And the next gen needs to learn it, and they need to learn it fast. And so how do we help them upskill faster? Actually, there's probably a huge opportunity there is to teach advisory to the next gen, right? But so much of advisory is based in what your specific technical knowledge is,
Yeah.
that it's very hard to teach a generic advisory.
Yeah, and that's what my book I outlined, Jody, is that human first approach of going. It's really just client communications. It's really understanding your client profile, helping people understand, what matters most to them, and then using your technical knowledge to, help them grow their business or help them grow their personal finances. Because as I state, the computer is going to do a lot of that work. It's going to spit out a tax return. It's going to spit out a tax plan. It's going to spit out a financial plan, estate plan, insurance plan, right? What are we really doing? We're helping people, understand where they want to go in their life, with their business, with their personal finances, and hopefully help them optimize their well-being. We call it a human first approach really to financial guidance.
Well, right. You're giving context to all this data, right?
Yeah.
Like there's all this data being thrown at them and you're helping them make sense of the data. That's truly what we do at our core, is helping business owners, helping individuals make sense of all their financial data.
Yeah. Yeah, I like it. All right, Jody, this has been awesome. Anything else that you want to share with our audience here?
No, just that those who haven't got on board yet, the time isn't running out. Like you still have time.
Yeah.
Like just get engaged in the opportunity to change, because like the world's moving. So let's just get on board. I think every CPA can do it. It's just, you got to get started.
Yeah, I love it. And get your book. I read it. It's fantastic, Jody. You outlined the value proposition wonderfully. So I'm a big fan of it. If anybody wants to get the book, what's the best way to do so?
Sure. So the easiest way to get it is go to the CPA Trendlines website. So it's like www.cpatrendlines.com, and you can search Radical Pricing and it'll come right up.
Awesome. All right, Jody, thank you so much for coming to the show. Our next interview, we're going to have to do this on your boat on the lake.
Awesome. That would be amazing.
I love it. Thank you so much for coming on.
All opinions expressed by Rob Santos and Rory Henry on this website podcast interview are solely their opinions and do not reflect the opinions of Arrowroot Family Office LLC or their parent company or affiliates, and may have been previously disseminated on television, radio, internet, or another medium. You should not treat any opinion expressed by anyone as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of their opinions. Past performance is not indicative of future results.